So that's it from me. We'll get started on blockchain, AI, and everything fintech related. So good morning, and over to you, Sally.
Thank you very much, James. Pleasure to be here, and welcome to today's session. I think a fantastic topic area. And to maximise the opportunity for discussion, I'm going to go straight in really to introduce our panel. So firstly, Michele Curtoni, VP Digital Product Development and DLT at State Street. Would you like to just do a quick introduction, Michele?
Sure. Hi, everyone. This is Michele Curtoni. I've been at State Street for about 2 years and something in a team called Digital Product Development. What we really look at is that the intersection of business and technology, and how this intersection can help product development. So we work across the bank with custody, global markets, technology folks, private asset issue, real estate, anything that you can think of that sits within the State Street realm, and look at that evolution. Prior to that, I spent nearly 8 years at the London Stock Exchange Group, where I set up the emerging technology practice. And prior to that, I was in merger and acquisition. So that's my story.
Wonderful. Thank you so much. And secondly, if I go to Jannah Patchay, Director, Regulatory Advocacy Ambassador, founder member from the London Blockchain Foundation. If I could go to you for a couple of minutes. Thank you.
Thanks, Sally. So yes, I'm Jannah Patchay. I'm representing the London Blockchain Foundation today, again as founder member, director and regulatory advocacy ambassador. So the London Blockchain Foundation was established in 2018 to promote a more diverse, inclusive and cooperative community amongst blockchain and DLT users and firms in London, but we do have a national and international reach and membership as well. I am also a director of Markets Evolution, which is my consultancy, which specializes in developing and building new markets for innovative financial products and services, and in helping both traditional financial services institutions and fintechs develop and execute their commercial strategies in a highly regulated environment. Finally, I also cover financial and technology innovation issues for Best Execution magazine.
Wonderful. Thank you so much for that great introduction there. And now next over to Iqbal Gandham, former UK CEO of eToro. Thank you. Can you hear me there, Iqbal?
So classic Zoom mistake. I've been talking about I'm on mute. So I've unmuted myself. So good morning, everyone. Yeah, so I've been at eToro, was at eToro for over 4 years. What did we do there? We retailed obviously the crypto assets, but the interesting part that we play in the jigsaw puzzle is we're also a retailer of traditional asset classes, whether it's commodities, indices, and stocks. So we've been looking at the world of tokenization of securities. In addition to that, we invest in a couple of other blockchain products, one called Good Dollar, which is based around universal basic income, and another one related to colored coins. So yeah, that's my interest in this space.
Wonderful, thank you so much. And last but not least, I'm going to go now to Lex Sokolin, CMO and Global FinTech Co-Head of Consensus.
Thanks so much. I'm Lex, great to meet everybody and see familiar faces. So Consensus is one of the core blockchain companies founded by one of the founders of the Ethereum protocol, Joe Lubin. In my role, I focus on the software business that we have as it relates to financial services. So everything from enterprise finance blockchain to tokenization and digital assets to decentralized finance infrastructure, as well as data and analytics around that. And so it's a great collection of folks, because for us, it's very much standing up that operating infrastructure, not the asset class itself, which is diverse from the other folks here. And then in my prior roles, I've done everything from Wall Street at Lehman Brothers, Barclays, and Deutsche Bank. So early exit with Lehman Brothers. And then I was a fintech entrepreneur for about a decade, building out a robo-advisor and digital wealth management platforms. And so now very much focused from going from distribution of product to manufacturing of product.
Wonderful. Thank you very much, Lex. Appreciate that. So I think if we dive in straight away to the first topic area and talk about all things tangible, basically, and look at some real case applications of blockchain and projects you think have had significant impact. And I know, Jannah, just drawing on a previous conversation, if I could go to you first for that question and perhaps share what we were just talking about, I thought it was really relevant to the question area.
Sure. So I think from what I've seen, there are two main areas within financial services that blockchain and DLT can add real benefit. And the first is on the more mundane side of things, so post-trade processing in particular. This is an area that's ripe for innovation, and an area where for some asset classes, there's been very little change over the decades to how post-trade events are processed. So we've seen, in interest rate derivatives in particular, there's a lot of automation that's occurred, and that's an area that perhaps would benefit less. But then there are some fantastic companies like Axony in the US, which has recently launched an equity swaps platform with 15 buy and sell side members on it. And I think Goldman Sachs and Citi were amongst those, where basically participants can execute their equity swaps bilaterally, and then all post-trade processing events happen on the common ledger behind the scenes. And this has the ability to radically transform the way that bank middle and back offices operate, because obviously it eliminates much of the need for human intervention post-trade, and so increases efficiency and reduces costs. And the reason they chose equity swaps was because it was the hardest area. So that kind of proves the use case in the first instance. The second major area is probably the one that most people are more familiar with, which is on the digital asset side of things and asset tokenization. And asset tokenization, while I don't see it as necessarily a new asset class, so security tokens, for example, are not necessarily a new asset class. They are just the fully digitalized, tokenized version of existing financial instruments. But we should not think of them as just digital versions of existing instruments. The power of DLT is that we can then do all sorts of amazing things with those instruments once we've tokenized them. So for example, we can build the smart contracts that govern them so that they can undertake automated reporting to regulators, thus eliminating a lot of the need for lots of disparate systems and things like that. We can also embed ESG principles and rules and reporting processes into those smart contracts and instruments as well, so that there's more automated ability to meet those new requirements and to demonstrate the ESG credentials of financial instruments. And this has the potential to really transform financial markets.
Excellent. Thank you very much. Couldn't agree more about that ESG aspect at the end as well, something close to what I'm involved in. And just seen a question here specifically for Iqbal that's just come in. Can you comment on the interest being shown by Crest in blockchain at the moment, if that's okay?
By the press?
Yeah, Crest.
Crest?
Crest.
Okay.
CREST.
I mean, so the easy comment or the easy way to reply to that is, look, it's a new technology. Everybody wants to get involved. They need to show that they have some interest, that they're not being left behind. I mean, I can't comment individually on Crest's interest onto this thing, but I think we need to kind of look past the hype on blockchain, and rather than just implementing it for the sake of implementing it, actually try to find real use cases. So I know we're talking about within the world of finance, and we're talking about post-trade settlement, we're talking about tokenized securities, et cetera, et cetera. I think it's way, way too early to actually say what the real use cases of blockchain are. If we step back and look at the internet, we'll realize most of the use cases of the internet today, we hadn't thought about 30 years ago. So we have to be a bit cautious, because if we all jump on the bandwagon and it doesn't work out, we'll end up ditching the technology and it won't really reach its full potential. So unfortunately, I can't comment on that individual interest.
No problem, thank you. And for the wider context as well, that's fantastic. And Lex, maybe if I come over to you now, for examples from your background, where you think the biggest impact is and where we're going from a trajectory point of view.
Sure. So I'll try to answer in the broadest way possible, in a macro way, because I think the nature of our industry is that you have pockets of demand that expand and then disappear every year and a half, give or take. And this is associated with people being interested in the asset class, or it's associated with digital transformation themes, or it's associated with what a public hedge fund investor wants to put money into, or what the Fed does. And so there are these lots of really disconnected themes, but they have a single thread through them, which is that we have not yet seen a platform shift in finance after about 10 or 15 years almost of fintech venture investment. So fintech venture investment put in about somewhere between 200 and 400 billion of checks into young companies. And primarily what we've accomplished is same old stuff in your phone. Instead of getting it on your paper, you get it on your phone. And it's kind of like building a Spotify of CDs. Music's nice, but you're not really going to have a major step change in the industry. Whether or not the step change is something you want, or whether it's good, is debatable depending on your seat. But regardless, the observation is the Googles and Facebooks and financials of the world have had far more impact and are far more of an existential threat to financial incumbents than SoFi and Revolut and Robinhood. And so what I think we're looking at with blockchain is that potential platform shift, that step change in the actual architecture of our financial products, where multi-asset class solutions, whether it's to pay or to lend or to invest or to retire or to get insurance, are all sitting on a common financial infrastructure. And so things like InvestNet and Fiserv and Temenos and Finastra and blah, 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 right? Like dozens of billions of dollars of enterprise value are essentially mutualized and commoditized into open source software. The path to get there is really hard and full of, let's say, human friction and emotion. And the way that that we see it is that, it's a 20-year journey, and it comes in steps. And the steps are fairly straightforward and visible. So the first step is just the mutualization of data and workflow. And this is what the trade finance stuff is, the collateral management stuff. It's how do I take data and put it on a public or private network so that in a consortia we can share a view of the world. Once you mutualize the data, you also want to have it apply to some sort of instrument. And that's where we get into tokenization, which is one level of technology risk or sort of innovation higher, and that is to use native digital assets with the embedded property rights, preferably on a public chain because of the cost benefit of that, in order to create networks and exchange and actually take advantage of the infrastructure rather than anchoring things. And then once you have the assets in the system, then all the software that used to do things to the assets, like, hey, let me rebalance a portfolio, let me underwrite this loan, which today applies to really nothing other than abstractions like QSIPs or tickers in your computer, not to the actual real underlying thing. That software starts getting built into the network itself. And that is what we see today already with decentralized finance, which has about 200,000 users, about $1.5 billion in collateralized loans, about 10 billion in cash equivalents. And so all of these things exist simultaneously. It is confusing. A whole bunch of them will die along the way, but there is this arc to the journey that I think will turn us from the music labels trying to write DRM into their DVDs, from that to Spotify and having open finance accessible globally and very cheaply.
Perfect, thank you, Lex. Appreciate you sharing that. Michele, if I can come over to you now for this question, that would be much appreciated.
Sure. So what I care about in my job is the institutional angle of where blockchain and by consequence that digital assets can have somewhat of an influence. So there's a lot of promises in the retail world about, and a lot of use cases have been brought about, also in the institutional world, by the way, where blockchain can bring efficiencies, tokenization of assets can bring efficiencies. Now, in my world, that's very hard to prove, because it's easy to do kind of small proof of concept that are very confined with a small set of participants. But when you bring it to the real world, when you bring it to the real guys doing collateral management and securities lending and financing, the interconnection of different systems, the backend integration and all of that is way more complicated than a proof of concept can actually prove to then showcase its value to them. So where I focus is where kind of, for the time being and for the past few years really, is where the replatforming angle of blockchain on one side, and then the supposed benefits of, as Lex mentioned, manufacturing of assets can then come together and bring benefits in specific business use cases. So now one thing that we see potential benefits is the cash. Cash obviously is a very broad term. There's several type of cash. You have, you know, what's the non-bank type of cash like e-money. You have something the more commercial bank money where liability sits at the balance sheet of a specific bank institution. Then you have a financial market infrastructure type of money with M0, M1 and different types with the central banks, right? So we are involved in a project called Finality where the consortium of banks is attempting at creating a claim on central bank money in partnership with central banks, and that can change the way and the balance sheet risk that we hold this type of money, not cash, on our internal systems. That takes care, and I think Jannah mentioned that at the beginning, that takes care of one asset of the one part of what delivery versus payment is. And everybody who's been in many calls on an institutional finance kind of space heard that blockchain can help DVP by quick install settlement and a reduction of frictions, all of that, you know, that's fine. But so we are taking care of the payments and looking at that. And then the assets space is a bit more hard for me to understand where the real benefits are. What I mean by that is that indeed we can create assets, we can create a bond, we can create a collateral representation, we can create, you name it, a derivative or an ISDA contract using tokenization, which is a higher kind of level abstraction of what an asset is. I'm paid for that, is how that benefits draw down to data governance model. The integration with my reconciliation system. Blockchain can reconcile. Well, I have a reconciliation system with 3,000, 4,000 clients. Do they see the benefits of blockchain? Well, no. So how many steps are in between? 100,000, right? So what's the first, what's the second, what's the third? So we have, personally, we have this strategy, which is indeed, you know, let's tackle cash and money the way it is. And with other prospects, a lot of projects looking at that. And then single projects on asset tokenization, and then understand the benefits in the business so that we can create that ripple effect that, you know, Lex was also mentioning. So the replatforming of the infrastructure, I believe that change will come maybe in 10, 20 years, whatever that is. You have to start from somewhere to start creating that, you know, indeed that the stone in the water to create the ripple. And then, as you know, budget cycles are 1, 2, 3 years long. CEOs are probably 5 to 10 years, right? Even less. So that is in contrast with that big market replatforming and evolution story. Well, we try what we can. So those are the kind of elements and angles where I see benefits by this technology, which is amazing. I've been working on it for now 5 to 7 years. So.
Perfect.
I just want to, could I just comment on something that both Michele and Lex had said. So Lex referred to the 20-year cycle, and Michele has raised a lot of the operational issues. And I just wanted to clarify that I don't see these benefits being realized in the near term. There are many challenges that need to be overcome. As Michele said, there's the payment versus payment side, which Finality are working on. You can't settle, instantaneously settle digital asset security on chain or on ledger without having some form, some method of settling the cash side of that transaction as well. And the challenge without any central bank backed payment mechanism is that you're always exposed to counterparty risk because there's a private issuer of that tokenized representation of cash. But more systemically, yes, there's a huge technological challenge across the market. We're not going to change everything overnight or sort of boil the ocean, to use a term that I hate, because systems and processes simply aren't set up to cope with instantaneous settlement in the first instance. So they can't realize these benefits right now. You've got to change everything front to back, and some pretty fundamental challenges around settlements and confirmations and things like that before some of these benefits can be fully realized.
Thank you, appreciate that. That's really, really useful. And I know we've touched on some of these areas already, and we've also got some associated questions, but the next main topic area was around tokenization and how, some concrete examples of how that is disrupting the industry. So if we could go into that area in particular, but also we've got a lot of questions here around smart contracts in particular, and how we can execute those without unintended consequences. Can you have safety without behavioral typing? So if we perhaps draw into this area now in a bit more detail, that would be fantastic. Did you want to come in on this one first, Iqbal?
Yeah, so tokenization is something that we've been looking at for the past, 18, 24 months from a user perspective, from a business perspective. Is it that something that customers want, need, and how does it work? And I think there's lots of different layers that we need to solve, one of them being the legal aspects of it, because I don't think it's just about selling tokenized securities. I mean, if I want to buy, I don't know, fractional shares in Facebook today, I can pretty much go and do that. It's not too difficult. Can I buy, ownership in property in a far-flung country today? Is it that simple? No, today I can't. So it's what we tokenize is the first question that we need to address, and I don't think we've necessarily addressed that question as yet. And the second aspect of it is, can we actually tokenize it? So taking property, for instance, as an example, I'm steering a little bit away from the traditional securities. There's a legal framework when it comes to countries in terms of how do we manage the ownership of it. And it's very easy for us to say, it's on the blockchain, ownership will take care of itself because there's a smart contract somewhere which just says, you now own this. But it's a little bit more complicated in the real world to actually show ownership of whether it's said property or of, even if it's like fine wine, etc. So I think there's the concept, it's really good, as all concepts are. They're really, really good. And saying we can open up the world 24/7, anybody can invest in anything, and suddenly it becomes accessible. I think the key to tokenization, the key that we're trying to find with our customers is this creation of liquid investing, in the sense that a lot of customers don't invest in various securities because they cannot get access to their investment quick enough if they need to spend it. And that's what prohibits them from investing in things like gold, in things like property, in art, fine wine, etc., etc. Tokenization can really add value to liquefy new investments at will. Then I think it's a huge benefit. If all it does is allow me to buy fractional shares in various asset classes, then I'm not sure if there's any real value.
Thank you, appreciate that, thank you. And perhaps over to Lex on this one, please, thank you.
Of course. So tokenization of assets. I agree very much that it's the alternative assets and some specialty finance instruments that are seeing the most benefits. And the reason for it is you don't have as performance of a capital markets infrastructure. And so instead of the 100,000 steps that already exist with the 3,000 counterparties, you've got 3 counterparties and they're all crazy people. And so having out of the box free software in order to trade some tokenized beer breweries, fantastic. No one else is going to do that. And so, so Consensus Codify offers private label software in order to take down any regulated asset, break it down into tokens, and offer it inside of a private label or API experience across lifecycle management. And there's a bulletin board attached to it that you can use a DeFi protocol. So this software is very much in place, but the challenge, as others have described it, as a human challenge of like, from the investment point of view, what asset class exposure are you getting, and do you need that exposure? And I think this is all still part of the journey of trying to reconcile two orthogonal systems. One is the working and performant way that we think about the capital markets, and two is blockchains, which take 85% of what we use and throw them in the bin and make them open source software. And I mean that strongly and strictly. Throw it out, completely pointless, unnecessary, delivers no value. So, rhetorical point. If you look at the rocket that Elon Musk sent to the International Space Station, that rocket does not run on Microsoft Windows. It does not run on Apple's operating system. It runs on free software from Linux. And that's a rocket into space delivering astronauts for 1/5 the price, or like 1/10 the price of what NASA could ever do themselves, right? And so we have bright examples where open source solutions to massively complex problems really outperform. But then when we come back to the financial industry today, we can't injure or prejudice what's already happening by trying to think of a completely different paradigm and shove it in as a component into a really complicated and working machinery. And so I think this is the challenge of how do we do the incremental thing in the incumbent world that we've been talking about of Finality is a fantastic project, right? So how do we introduce cash sweep or money market or private cash equivalents or wholesale payments? How do we do these in little bits? And then simultaneously, I think we're going to be seeing increasingly meaningful amounts of crypto native capital that will just never ever, in their whole life cycle ever, touch traditional systems. And so the question is, when that's at 100 million, maybe it's irrelevant. When it's at 10 billion or a billion, it's there. When it's at 1 trillion, I think clearly that's a problem that needs to be resolved. And so I think that will do most of the work. And if you want to see evidence, Coinbase exploring an IPO is evidence. The stable coins, right, moving over to Ethereum is evidence. And I'm making this point in a rhetorical way just to highlight how complex the challenge is and why I think there's so much value for people who go in and solve this stuff, whether your seat is at State Street or whether it's at eToro or whether it's in a startup. There's just so much opportunity.
So
Thank you,
may
Lex.
I
Couldn't agree
comment?
more. Come through, yeah.
Thanks. I'll follow up on this. So internally, we try to explain what Lex was referring to in a matrix. So you have tokenization or this promise of let's call it asset tokenization because that's a topic, can really happen in a multiple ways. So imagine from a traditional finance from the left to decentralized finance to the right, and then a security being public, meaning it can be traded on the secondary markets as defined as a regulated investment exchange in the UK, or other in ATS kind of in the US, when the public record sits with a central security depository, down into what is a private security, or again, down into what is a non-security for the time. Right? So Bitcoin, you can think about it as commodity or any other things, what is Ether, so all those kind of different questions. So you have basically a matrix of a 3x3 of 9 different quadrants. So you have a traditional finance where a public security can be issued with a CSD, and there you can apply a blockchain layer and some tokenization layer, right? And so these are some of the projects we've been seeing where you can issue a bond that have then a duplicate. I think Jannah was mentioned that, like a duplicate system, and then you have the benefits come to prove that one project versus the other, kind of a randomized controlled trial, works better than the previous system you have. Then you go away and then you say, can I issue a public security without a CSD, but on a blockchain? That's in its own level. Can I issue a fully native security that is public? Not really at the moment, because it's kind of beyond, you need legal changes. And then you go down into what the word on the bottom right of this matrix share it later. Non-security and full native. That is what Lex was saying. So is that growing? So is that the word decentralized finance and crypto native capital growing to create what? To create another kind of, is that David and Goliath story, or is it like two different worlds growing together where then you can integrate? Because if I create a reforestation company and I go on, have my processes and I want to raise capital and I have different ways, do I go on an IPO? Do I do a crypto? So will that be the choice in the future? Or will those two things need to be integrated because an asset manager will have a portfolio that have assets in one bucket and then the other, and then many others. So what's the future? We don't really know. That's why we're trying little by little, project by project to tap into these things and really bet long term, because eventually this is a human problem, right? Where do you think the revolution is? Where do people really put passion and money behind to get the success of a specific view versus the other?
I'd just like to touch on something that Iqbal had said as well, following on from Michele, on liquidity. And this is where I think a lot of the hype actually is. When people say, we can tokenize assets and it will immediately create hugely liquid markets, we'll open them up for global access, and we'll have retail investors piling in. That simply is not true. So coming from a background of building SME growth markets and markets in illiquid asset classes, this is not the case. Whilst, and again, I think Iqbal pointed out, there's real opportunity in some asset classes where the processes and the sheer volume of paperwork to date, so for example, tokenized property or something like that, has prohibited it from being more liquid. There are potentially opportunities there, but we're not going to be able to tokenize equity in very small companies and automatically expect it to be hugely liquid. We already have platforms that do that, such as Crowdcube and Seeders and those sorts of crowdfunding platforms, and those are not liquid instruments, and tokenizing them will not make them liquid either. So I think we have to be realistic about the limitations and the constraints of building markets in digital assets.
To the point.
Perfect. Thank you very much for the clarification on that one. And just being careful slightly of the time here as well, can we draw more into the cryptocurrency area now and look at the future, and if we think that is viable, and draw on some examples in that area? If anybody would like to particularly come in on that one, that would be fantastic.
Okay, I'll come in since
Thank you, Iqbal.
Since everybody else is muted, I'll come in on that one. So I think 2017 probably happened a few years too early for the world of crypto assets and cryptocurrencies. I think there's still a confusion of the difference across the board of the assets versus what's a currency and what isn't. But I think we're starting to see governments start to take more of an interest, whether it's via stable coins, et cetera, et cetera. So I think there is a future, but I think one of the key components to the world of crypto and crypto assets that we're missing is what I like to call the Hotmail of crypto moment, or for those who are slightly younger, the Gmail of crypto moment. If we compare the world of crypto to the world of the internet, we'll realize that there isn't a single service that I can think of today which doesn't require me to have an email address. So without an email address, excuse me, I can't use Spotify, I can't use Amazon, I cannot sign up to Facebook. So we've all needed an email address. And I think what we're doing right now with the world of crypto is missing a step. We are going to the, why is nobody spending crypto? Why can't we spend it on Amazon? Why can't I use it in the stores, the shops, this, that, the other? But the step that we're missing is that we need to give everybody a wallet or a wallet address. Without a wallet address, nobody can use cryptocurrencies. So I think we've kind of fast forwarded a little bit too much. So I think if cryptocurrencies are going to work, which I believe they are going to work, there's a couple of stepping stones, and one of those is somebody somewhere needs to work out who's going to become the Hotmail of crypto and give everybody a wallet address for some reason or other.
Thank you. I couldn't agree more on that. It was interesting to see as well, crypto being linked to social impact, a big area of mine, and some announcements from the UN this week. So that for me could be another area to look at. But Jannah, perhaps come back to you on this one.
So was that particularly on crypto social impact?
It could be, or just generally the viability of crypto, and just
Viability
some
of
examples. Yeah.
cryptocurrency. Yes, I think when we talk about cryptocurrency, we have to be quite careful about what exactly we're talking about. So are we talking about, you know, what some people describe as the native cryptocurrencies, such as Ether and Bitcoin, or are we talking about a wider group of things that include stable coins and then potentially central bank digital currency, and things like that as well? And the point Iqbal made about everyone having a wallet and everyone having having access is a very important one when we think about, you know, particularly some of the benefits that are being touted about central bank digital currency. So there's a lot of discussion, especially post-COVID, about how a retail CBDC could enable better distribution of funds by the government via CBDC mechanisms, or how it can promote financial inclusion. And that's absolutely not going to happen, because people aren't going to be magically financially included in an all digital environment when they're not even included in a semi-digital environment that exists today. So we do have to think about that universality aspect. How do you make sure that everyone is given the same access standards? And that's more than just about wallets and interoperability as well, because you're not going to want people on completely separate mechanisms for everything, because that just complicates things if you have to have multiple mechanisms of holding different types of cryptocurrency and things like that. So, and then that leads on to a whole other question about how do you then enable the technology infrastructures that supports that, and the whole idea of the internet as infrastructure rather than as a consumer service, as it's often regarded now. So lots of questions there. I'm not convinced, as you might surmise from this, that it will automatically promote financial inclusion, but there's definitely opportunity there. We just have to think carefully about how it's implemented and executed.
Absolutely, thank you. Joe, did you want to come on this one? I saw you just come on live.
Sure. Yeah. It's just that you never know, noises in the background. So from a company perspective, we have worked on projects involving cryptocurrencies from the perspective that is another asset class. And you know, from a banking institution, you probably have to be agnostic of what that is, even though you have to have views, and there are many people with many different views. That's why I bring it always to the people, because you might have your COO or a CEO with a strong view onto something, and then you have an amazing team working on something else, and those two things are in disaccord, or you know, similar things. So it's just another asset class. So be it, right? So if a client of mine with a big portfolio is investing in IBM versus Microsoft, I don't really have a say in it. And if they want to invest into Bitcoin because they see value in that specific application, or that's fantastic. So there's that angle, right, from an institutional perspective. Then there's the other angle, which I think everyone earlier was referring to. So what is the use, and what's that? What hypothesis you put on cryptocurrencies to be successful vis-a-vis what, right? So if you want Bitcoin to be the next money, well, there's a lot of things to be considered. Now we saw, Jannah was referring that earlier, a lot of retail and some wholesale CBDC projects, and you know, to make the helicopter money a real thing. Right, like to me, like, do you need a CBDC? There's a wallet consideration, there's an infrastructure consideration. My phone works better than a CBDC for that matter. So I actually don't really care what's behind it, right? I really don't. And then you get into a model, look at the Safaricom model for M-Pesa, starting in Kenya and other East Africa places. The infrastructure is quite cumbersome, but eventually works simply, not even, you know, version of prior to the mobile phones that we are known, you know, iPhones and stuff. So CBDC can play against that. Is that an infrastructure story? What are the benefits? So that's the question that I see there. But then when I look, and then the third angle, which is, you know, the promise of Bitcoin. So anti-authoritarian, no censorship, distributed ledger with self-incentives built within the technology, you know, that's fascinating, right? That's a different world. From a company, my company perspective, we wouldn't probably comment on that, right? And then there's also a lot of different coins with a lot of different uses for very specific use cases. BAT for the BAT, I think it's called, for basic attention token. That's beautiful, right? So that's a benefit there. But then you have to replicate, and you're replicating a lot of different blockchains, so to speak, or ecosystems, and then you have to bridge them. And I think some of the work Lex and the team are doing there is to indeed create that view there. And then there's an infrastructure with the different wallets, and the Coinbase and the like are doing that. So my perspective, I'm quite agnostic, and then there's the personal perspective. You know, I use some of cryptocurrencies, right? And I use them when I think it's appropriate versus using my Visa or my MasterCard or my Revolut on my phone, right? So there's that. I don't know how it's gonna span out. I just know that that is something that we have to watch and we cannot not take a look at.
Perfect, thank you. And I think what we'll do, I'll go to Lex for a quick point on that, if that's okay. And then, just conscious of time, I'll do a little round the table just to maybe if you all share one aspect you think is holding back blockchain adoption more generally. And for me, I would go for education for my answer on that one. But Lex, if you could just finish off on that point, and then I'll do a quick round the table on that final subject, if that's okay.
Absolutely. So I don't know how important it is to bring everybody along, to be honest, to this. And there are clear analogies for it. So is Amazon a successful commercial destination? By the global numbers, no, it doesn't matter at all. You know, like just 11% or 12% of commerce is e-commerce. That's nothing. It doesn't matter. People shop in physical stores, 90%, right? So clearly that view is wrong-headed and incorrect. If you look at the percentage over time of e-commerce versus physical commerce, it's gone from 2% to 10%, and it's growing cumulatively, and there are bright examples where countries have it at 30%, right? So I think in the early years, when the percent share versus everything else is small, it's very easy to dismiss as a toy, but that's a cognitive mistake. And then the other analogy is like, good luck paying for an Uber with your coin, with your dollar bills or your euros. Nobody has the obligation to help you pay for Uber with your dollar bills. It doesn't matter that you have this problem. You use dollar bills to shop at the store that they can take, fantastic. You can swipe a credit card through a point of sale solution which travels on credit card rails, fantastic. If somebody doesn't take credit card, they don't take it. You know, if you want to use your phone with an NFC chip against a contactless solution, that has nothing to do really with you know, swiping a credit card. That's a completely separate infrastructure that was built out for a different use case. Does Apple Pay matter? Is Apple Pay a fundamental failure because 10 years ago they couldn't get it up and running at Starbucks fast enough? Like, of course not. That's all irrelevant. And so I think these are platform shifts, and you have to evaluate them on the merit of the thing they're trying to do, on the time scale of when we're trying to do it. And I think it's going to be pretty much impossible to shove crypto into a system that doesn't want it. But I do think what is super important is having native crypto economic activity that is productive and is not, I'm going to say, merely financial speculation. And so hopefully, you know, that's how you grow out of it. You grow Amazon by having lots of internet-based commerce, not by having lots of shops where you go in and can use a computer and, you know, buy something on the internet from there. And I think that's the mind shift that has to happen for this to occur.
Perfect, thank you. And just from a timeliness point of view, do we do this quick around the table, just maybe one example each about what's currently holding back blockchain? Those unfortunately due to time.
I'll start, Sally. Sorry, you sounded like a Dalek on my Zoom thing. I think there's something wrong with the mic. So yeah, just a quick one. So again, I'll use the internet as an analogy. I cannot recall a single instance when, whether it was Twitter, Facebook, MySpace, or any of these websites which launched, and on their homepage they'd written, "We use the internet and TCP/IP to provide this service." So I think the day we stop talking about blockchain on the homepage of our projects and actually start focusing on the projects and use case, I think that's when blockchain will really come to its own. And we're too busy talking about blockchain right now. We need to talk about the use cases.
I'll go next. So yeah, I think one of the biggest barriers to adoption is going to be on that interoperability with existing system side of things. How do we change the full front to back stack to accommodate the opportunities that are provided by DLT-based solutions at any level in financial markets? And that is going to be a multi-year process. It's not going to happen overnight. And the second, very quickly again, is on that PVP leg. When do we actually get trustable cash on ledger that is not that is not exposed to counterparty risk? That's going to be critical in advancing digital asset markets more generally.
Yeah, I think culture and people comes first to mind. I see many of the points made earlier, especially like you don't need to bring everybody along, and there will be cases where adoption is not proven by the number of people involved or a number of companies involved, but by the direct benefits that the specific application is bringing forward. However, if we do want then to bring, if I have this hypothesis in my head, the blockchain tokenization has the specific benefits, then I want to bring different companies and at least in the wholesale financial institution space where I work in, then you have to have a coherent number of companies to bring it forward, because the network effect has to have a core of participants to then expand. So that is a culture of people, and then tangible benefits, which really talks to the integration point. So I think showing that ease of integration and showing that in a specific team you have a Kubernetes system that can orchestrate your blockchain node instead of having an actually don't know what they're talking about. So you have all these culture and people issues. So I think that I put in number one. So technology then eventually is probably the easiest thing, right, to do. It's more than how you bring process it, redesigned by people.
I think that's a great point, especially that a network isn't just a bunch of software, it's the network participants. And so getting the market participants to use a tech network is absolutely key. I think my suggestion would be direct deposit. So get people's pay to land in their crypto wallet, have their primary bank account be their crypto wallet. And I think that that would fundamentally be the largest thing that could happen.
Great example. I think there's a mic issue, so what I'm going to do to wrap up, I'm going to go straight to James to close off the session, because I think my mic has been an issue. Thank you.
Yeah, I think we've lost you there, Sally, but thanks very much. And yeah, that's all we've got time for today's FinTech Friday discussion. So special thank you to Sally, Michele, Jannah, Iqbal and Lex for your time and insight this morning. Thanks also to everyone who tuned in and participated. Loads of ground covered today as usual, but as ever, there are a number of questions that we didn't have time to cover. So just look out for some communication from us, and feel free to join our LinkedIn group and we can continue that discussion. And I'm sure our speakers today will be available to answer some of those questions moving forwards. So if you enjoyed today's discussion, then you might like to visit Money Next Summit online. It's a 4-day free to attend online conference covering more blockchain, banking, payments and fintech topics. So certainly worth checking out. We'll be back here at the same time in 2 weeks on the 24th of July with a discussion on innovation in the payment sector. So that's it for now. Thanks everyone. Thanks to all our panelists. Enjoy the rest of your Friday and have a great weekend.
Thank you. Thank you everybody.
Thank you all.
Bye-bye.
Bye.